Welcome back to Zaki Crypto Update, your go-to source for all things crypto. If you're passionate about staying ahead of the curve in the volatile world of cryptocurrency, you've come to the right place. Today, we're diving deep into the latest developments around Pepe coin, one of the most talked about meme coins in the market. With its recent 6% dip and a wave of bearish signals, many are wondering what's next for this digital asset. Is this just a temporary setback, or are we looking at a longer-term decline? Stay tuned as we break down the market dynamics, technical indicators, and potential future movements of Pepe coin. And before we dive in, make sure to smash that like button, hit subscribe, and ring the notification bell so you never miss an update on the latest trends and insights in the crypto world. In the ever-evolving landscape of cryptocurrency, the rise and fall of meme coins have captivated the attention of both seasoned investors and curious onlookers alike. Among these, Pepe coin has emerged as a standout, gaining popularity for its unique branding and community-driven ethos. However, as of late, the market dynamics surrounding Pepe have taken a turn for the worse. The coin has been embroiled in a bearish trend, prompting concerns about its future. This recent downturn, marked by a 6% price dip, has left many investors wondering, is this a temporary blip, or are we witnessing the beginning of a more prolonged decline? To fully understand the current state of Pepe, it's essential to place it within the context of the broader cryptocurrency market. Over the past few weeks, the entire crypto space has been undergoing a correction. This correction has not spared even the most resilient of meme coins, with the likes of Dogecoin, Shiba Inu, and Floki also experiencing downward pressure. For Pepe, this correction has manifested in a series of price declines, culminating in the recent 6% dip. The coin, which had been enjoying a period of relative stability, now finds itself in a precarious position. The bearish trend that has gripped Pepe is not an isolated phenomenon, but rather a reflection of the overall market sentiment. Investors are becoming increasingly cautious, and this caution is being reflected in the declining prices of meme coins across the board. Despite the bearish signals, there is a silver lining for many Pepe holders. According to data from Intablock, an impressive 72% of Pepe coin addresses remain profitable. This suggests that a significant portion of investors acquired Pepe at prices lower than its current market value, providing them with a cushion against the recent price drops. However, this statistic also implies that nearly a quarter of Pepe investors, approximately 23%, are currently facing losses. This group of investors is particularly vulnerable to the ongoing market correction. The risk here is that these investors, in an attempt to mitigate further losses, may resort to selling off their holdings. Such a move could exacerbate the existing bearish trend, leading to even more significant price declines. The relationship between investor behavior and market dynamics is a crucial aspect to consider. The increase in outflows, where investors are selling off their Pepe holdings, correlates with the recent downturn in price. This trend is indicative of growing uncertainty and fear within the market. As more investors exit their positions, the downward pressure on Pepe's price could intensify, making a recovery more challenging. In the world of cryptocurrency, volatility is a given, and Pepe is no exception. Over the last 24 hours, the coin has experienced significant price fluctuations. At the time of writing, Pepe was trading at approximately $0.000095 during European trading hours, marking an 8% dip. This decline is part of a broader trend of volatility that has seen Pepe's price oscillate between a low of $0.8924 and a high of $0.00001052. Such volatility can be a double-edged sword. For traders, it presents opportunities to profit from short-term price swings. However, for long-term investors, it can create a sense of uncertainty, making it difficult to determine the best course of action. In the case of Pepe, the recent volatility is particularly concerning because it may signal the continuation of the bearish trend. If Pepe's price continues to decline, we could see it test the critical support level of $0.000009. Should this support level fail to hold, the price could drop further to $0.000008, reinforcing the bearish outlook. For investors, these levels are crucial to monitor as they could indicate the potential for further declines or, conversely, a possible reversal if the support holds strong. When it comes to predicting future price movements, technical analysis is an invaluable tool. For Pepe, the technical indicators currently paint a rather grim picture. The Relative Strength Index RSI, which measures the speed and change of price movements, is sitting at 25. This level is considered oversold, suggesting that the recent selling pressure has been intense. An oversold RSI typically indicates that the asset may be due for a short-term bounce. However, in a bearish market, an oversold condition can persist, leading to further declines before a reversal occurs. Another critical technical indicator is the Moving Average Convergence Divergence MACD. This tool is used to identify changes in the strength, direction, momentum, and duration of a trend. Currently, the MACD line for Pepe is at minus 0.0000000049, while the signal line is at minus 0.000000000000. The fact that the MACD line is below the signal line suggests that the bearish trend is still in play. Additionally, the histogram, which visually represents the difference between the MACD and signal lines, shows expanding negative bars. This expansion indicates that the selling pressure is not only present but also increasing. These technical signals underscore the challenges that Pepe faces in the near term. Unless there is a significant shift in market sentiment, the bearish trend could persist, leading to further price declines. For investors, this means that caution is warranted. While the oversold RSI might hint at a potential bounce, the overall trend suggests that any rally could be short-lived unless it is accompanied by strong buying interest. While the technical indicators point to a continued bearish outlook, there are signs that the downtrend in Pepe might be losing steam. According to CoinList data, trading volume for Pepe has decreased by 2.19%, bringing it down to $926.14 million. A drop in trading volume can sometimes signal that the selling pressure is beginning to subside, which could be a positive sign for those hoping for a price recovery. Moreover, there has been a significant decline in open interest, which has fallen by 19.48% to $107.67 million. Open interest is a measure of the total number of outstanding derivative contracts, such as futures or options, that have not yet been settled. A decrease in open interest often suggests that traders are closing out their positions, which could indicate that the current downtrend is losing momentum. However, it's important to approach these indicators with a degree of skepticism. While a decrease in trading volume and open interest might hint at a weakening downtrend, it doesn't guarantee a reversal. It could also reflect a general lack of confidence in the market, with traders choosing to sit on the sidelines until more definitive signals emerge. As we look to the future, the path forward for Pepe remains uncertain. The next few days and weeks will be crucial in determining whether the current bearish trend continues or if Pepe can stage a comeback. In a bearish scenario, if the selling pressure persists and support levels are breached, we could see Pepe's price decline further, possibly to $0.000008 or even lower. This would be a challenging environment for investors, particularly those who are already facing losses. In such a scenario, it might be prudent to consider hedging strategies or even exiting positions to minimize potential losses. On the other hand, there is a more optimistic scenario to consider. If the market stabilizes and positive momentum begins to build, Pepe could see a rebound. A key resistance level to watch would be $0.000095. If Pepe can break through this level and sustain its position, it could pave the way for a recovery towards $0.000001. In an even more bullish scenario, a surge in buying interest could push the price beyond $0.000001. potentially targeting 0.0.00000000015 However, for this to happen, significant catalysts such as positive news or broader market recovery would be necessary. So what's next for Pepe? The road ahead is anything but certain, with a range of potential outcomes on the table. Whether we see a continued decline or a recovery will depend on a myriad of factors, from technical indicators to market sentiment and broader economic conditions. As always in the crypto world, it's essential to stay informed and remain agile in your investment strategy. If you found this analysis helpful, don't forget to hit that like button and subscribe to Zaki Crypto Update for more in-depth discussions on the latest trends in the cryptocurrency market. And hey, why not share your thoughts in the comments below? What do you think is next for Pepe? We'd love to hear your predictions. Thanks for watching, and we'll see you in the next video. Stay crypto savvy.